So, welcome everyone. Welcome to module number 8, timing for maximum profits. Now, a follow-on module from the previous one as we are flowing through. Now, if you are watching these modules via recording, then you will know that we've been going through the steps, the Pentagon steps. And covering each of them in a bit more detail than how they are in the book. Obviously, we go over them in detail in the book, but sometimes it's good to, I guess, have the wording explained and any questions kind of answered. So that's why I've been recording these modules with a live studio audience, shall we say, a live audience, which is fantastic. The people are here live, but if you are watching this recording, and if you do get any questions during this recording, then obviously all you need to do is just email our support team and they can answer. A lot of the questions are answered during the module because obviously we're getting a lot of awesome questions live. But if your question is not answered, please just reach out to our support team, support at Fast Launch Digital, all one word, fastlaunchddigital.com. Now, if you haven't received your copy of your book yet, if you're watching the recording, then there's a good chance that potentially your book just got ordered. So therefore, it's going to we're being quoted by Amazon that it takes within 5 business days. But if it has been longer than 5 business days, please send an email to our support team, support at Fast Launch Digital, all one word, support at fastlaunchddigital.com, and we will follow up with Amazon as to the whereabouts of your book because we're being quoted off Amazon. As I said, it should be 5 business days. Now, that may vary at different parts of the world, but as there's Amazon all over the world, we've been assured by them that it's usually arrives to everyone within 5 business days. But if that's not the case for you, please send an email to our support team, support at fastlaunchddigital.com, and we will follow up with Amazon as to the whereabouts to get that out to you ASAP. Okay, so let's get started in this module, timing for maximum profit. So obviously, this is the next module here is built on what we've already covered over the first 3 steps. This is step number 4 in the Crypto Pentagon. Now, you'll obviously notice as we go through this, now obviously these modules are aimed for beginners. Okay, this is a beginner course. Obviously, if you're intermediate or advanced in crypto, there's going to be a lot of things we're going to be covering here that potentially you could look at and go, well, I kind of already knew that, or I may have already heard that before. That's fine. That's okay. You may be looking at this as a refresher, but as I said, these modules are designed at beginners in this to kind of really expand on people's basic knowledge and then build on it from there. Okay, so let's get kicked in. So sometimes what we want and what we need, and I mentioned this a few times, are 2 completely different things. And as a beginner, sometimes what we want is profit right now. Okay. And I put money into this investment, last week and I haven't quadrupled my money. What's going on? But often, what can happen is that if you time the market at the right time purchasing, then there's a very good chance that you will make gains from your investment. You will profit from your investment, but it can take time. Okay. Now, by time, I'm not talking you need to wait decades for returns in crypto. Far from it. In cryptocurrency, quite often, if we time our entries during a 4-year cycle, we will quite often, nearly every time, based on the last 12 years of data, be able to return a profit within that 4-year cycle. So this module is all about timing that. This module is all about timing to ensure that we can get maximum profits from the cycle. All right. So obviously this is number 4. Okay. This is number 4 in the Crypto Pentagon. Number 1, we had cycle. Number 2, narrative. Number 3, we covered in the last module, which was portfolio. This is number 4, all around timing. Okay. So No one has a crystal ball to know exactly what the markets will do and when. Let's be very clear on that before we get started in here. Not me, not anyone has a crystal ball to know exactly what the markets will do and when. And quite often, not just crypto, lots of different investments will do a lot of very strange things quite often, and there's no rhyme or reason or anything behind it. Now, I don't have a crystal ball, unfortunately, and no one else in this world does. Okay. What I do have though is a very long time of market experience within the crypto market. Now, this is my third cycle that I've been in with Bitcoin and cryptocurrency. I entered the market at the beginning of 2016. So I've been in the market, as I'm talking now, about 8.5 years. So I've been in the market a fairly long time, and I've been able to experience, Bitcoin go from in and around the price of 300, 400, 500 US dollars all the way up to 70 odd thousand US dollars. Ethereum from 13 odd dollars all the way up to 4,800 US dollars, and so on and so forth. So I've been able to witness and see some coins go from very small amounts to very large amounts in what can only be described as very short periods of time, right? We saw a high of Bitcoin at the end of the 2021 4-year cycle in November 2021 of about 68, 69,000, let's say 70,000 US dollars. And just 4 years prior to that, when I entered the market, Bitcoin was sitting in and around 400, 500 US dollars, right? So we've seen considerable gains within the market within very short spaces of time. Like I said, the crypto market, if you time it correctly, can reward you in a very, very big way. All right. It's all about studying the data. It's all about studying the history of what the markets do. Now, I say this all the time. When I talk about crypto, there's no need to talk about hype and everything else like that. There really isn't. If you just talk about facts, figures, and data in crypto, the facts, figures, and data point to some very extraordinary results in short spaces of time. If you know what you're doing, if you know how to time the market, and you understand how markets in general work. Okay. Now, as always, whatever the market tells us and it shows us and it's giving us, I'm not married to any one particular strategy. I'm not married to any one particular theme. I'm always willing to adapt, willing to adopt and make changes as needed. Anyone that's stuck to a particular topic or stuck to a particular coin, no matter what happens, or no matter what information may come out about that coin, no matter what the technical data tells us about a coin or a topic or whatever, those people are quite often get stuck in positions long term and end up losing out. We've always got to be prepared to have our ideas challenged. We've always got to be prepared to adapt and adopt to new theories as they come out through the cycle. Okay. So thanks, guys. Just got the guys live here who are asking questions, which are fantastic as I'm going through here. And we're going to have a Q&A at the end. So please remember to ask any questions at the end of the module. So what we have here is the Bitcoin 4-year cycle, and previous history is our best guide. All right. It really is our best guide. And there's no other way of me explaining the Bitcoin 4-year cycle than saying it is a very, very big deal when it comes to investing and being prosperous from crypto, or from Bitcoin and crypto. You need to know where the right entries are, and you need to know why that is. And if you can master those, or at least be prepared to listen and be open-minded, then you'll have a very, very good chance of being able to capitalize on these cycles. Okay, so make sure you watch this whole module right to the end. I'm going to cover as much as I possibly can about timing, about capitalizing on these markets. Okay. And I want to ensure that you get the absolute most out of this. Now, this is the same theory, the same system that has created many crypto millionaires, and I think it'll continue to do that. But as I said, it can always change. Things can always move and potentially show us different signals. And if that happens, we need to adapt and we need to adjust accordingly. But as we see right now, and as it is right now, this data is telling us what it is, and that is what I'm sharing with you. And if that ever changes, then we will adjust accordingly, as I said. So essentially, what we're talking about here is the components of the 4-year Bitcoin cycle, right? The components of the 4-year Bitcoin cycle. So what do we have here? Well, the first part of the Bitcoin 4-year cycle, all right, with the first year is that after the halving, okay, which we experienced a halving in April of 2024. So as this is being recorded about 4 months ago, we had the April 2024 halving. And then quite often after that halving, we see a bit of plateauing happening, followed by essentially what is approximately a 1-year bull market, right? A 1 year of positive price movement. Now, this is quite often followed in the Bitcoin 4-year cycle by a approximate 1-year bear market, right? So we hit a high, we hit all-time highs, and then we go down. Now, of course, charts don't just go up in a perfect way, hit a top, and then go down in a perfect way. Of course, that doesn't happen. We're going to see steps here. We're going to see drops. We're going to see movements up. But ultimately, the Bitcoin 4-year cycle tells us we're going to hit an ultimate peak, and then we're going to have a drop. It's not just going to free fall down. Yes, there's going to be days, weeks where it free falls. Then it might prop back up. Then it'll go back down again, prop back up. But ultimately, we will hit somewhere down. After approximately a year, we'll hit a capitulation, as we call it, in a Bitcoin 4-year cycle. And then what we often see after that with the Bitcoin 4-year cycle is what's called a consolidation and recovery period, where we see a lot of sideways movements. We do see dips down, movements up, dips down, movements up, and that kind of builds up into the next halving. And then we go again up into another bull market. Now, this has occurred over the prior 3 halvings. This has occurred over the last 2 market cycles that I've been a part of. And the way that this market is shaping up as to where we are right now, which is somewhere approximately after the first halving, after the halving here, we're at the 4th halving now. We are kind of I like to say, like the foot of the mountain. We're at a point where we've seen plateauing movements to the side. We've seen some movements down. We've had obviously a large movement up at the beginning of the year. Now we're kind of dropped a bit. We're plateauing a bit. And we're not really doing much at all. But usually what this leads us into is essentially approximately a 1-year bull market is what we've seen in previous 4-year cycles. And there's no reason at this stage, the data's telling us that we're going to see something similar again. Now, do I have a crystal ball? No, I don't. Do other people have crystal balls? No, they don't. But we can only go off the data and what we see and what's happening. And there's no reason why this isn't going to happen. This isn't going to happen again and take us into essentially a high of Bitcoin. Now, previous high of Bitcoin of 70,000 US dollars in the last cycle was in November of 2021. The previous high before that of 20,000 US dollars was in December 2017. And the previous high of that of 1,000 US dollars was in December 2013. So as you can see, these are 4-year spaces, right? December 2013, December 2017, November 2021, virtually 4 years, 47 months. And then if we do 4 years after November 2021, it's November 2025. All right. So that's why we're quite excited as to what's happening and what's going on within the cycles. Now, what we want to be doing, the idea is to be buying when everyone is crying. There's lots of statements around that, but buying when everyone's crying is a good way. So at the moment, for example, we saw a movement up to 70,000 US dollars earlier this year. It's now moved down to about 60. It's kind of gone a bit under 60. And they're starting to get a lot of tears in the market. A lot of people crying, saying, "Oh, I bought at 70,000." And this is what we call weak hands, also known as dumb money. And they're inevitably dumb money is going to sell, not knowing and not realizing, not understanding what's potentially around the corner of a bull market, right? So we want to be buying off that dumb money while they're crying, right? And then ultimately at the end of 2025, around that period when we see highs, that's when we want to be selling. When everyone else, when the dumb money's buying because they sold down here, then realized they made a mistake and bought back at the top, and they buy in, that's when we want to be selling. We don't want to be selling. We don't want to be buying at the top here. We want to be selling at the top here. Okay. All right. So money flows from those who don't know what they are doing to those who do. And that the markets have always worked that way, and that'll never ever change because some people just are unwilling to learn how markets work. Now, investing isn't an everyone wins game. There are going to be winners, there are going to be losers. You profiting from this market means that someone else is not profiting from this market. Okay. It's just an unfortunate part of how markets work. We need to have dumb money in there so we can profit, right? But you guys are doing the right thing by learning and understanding how market cycles work. Now, I used to say things like when the Uber driver or the taxi driver starts talking to you about crypto, it's a good time to be selling. But these days, every Uber driver and taxi driver that I get in with has crypto, so it's impossible to use that theory anymore. But essentially, what we want to be doing is when everyone is buying in, and your grandma's calling you to ask you about Bitcoin, and people that have previously written it off maybe reaching out to you because you've told them about it before. That's when you want to be selling. Okay, ultimately we want to be selling when the euphoria kicks in, when all the hype kicks in, when we're seeing massive highs, and we want to be buying at previous lows. Okay. So that's what we want to be doing. Okay, that's what we want to be doing. And people who have been within the community, some people have been here for the last 6 months, 12 months, 24 months, and even longer. What have I been saying, guys, who have been in the community for the last couple of years? What have I been saying? I've been saying dollar cost average into the market, haven't I? Right? That's what I've been saying over and over and over and over again. And that's what we've been doing. Hopefully, a lot of the community I know has been doing the same thing. Yep, thank you, Aaron and Debbie. Right, DCA. We've been dollar cost averaging into the market. Okay, dollar cost averaging into the market over the last few years while the prices are lower. But I still feel where we are right now as we've just got into September of 2024, I still feel prices are still at a very nice range to still be dollar cost averaging into at the moment. We're still at the foot of the mountain before this has really taken off, right? Dollar cost averaging into the market, or like I say in the book, feeding the beast, is, in my opinion, the best way to be able to capitalize on the markets. All right, best way to be able to capitalize on the markets. And this is another part that I talk about when I talk about crypto seasons, right? All right, when I talk about crypto seasons, we want to be kind of we've got like selling and harvesting season, we've got buying and planting seasons, growing seasons, right? And where we are currently right now is after this first halving, we're still in and around we're kind of at the back end of the buying and planting season, right? The halving's just occurred. In my opinion, we're kind of at the back end of the buying and planting season. And within the next few months, based on the last 12 years of data and the Bitcoin 4-year cycles, we should start heading into what's called the growing season. And then ultimately at the top, right, when we grow our crops, ultimately what do we want to do? We want to be selling, right, harvesting our crops for a profit, right? We want to be selling at the top. We want to be buying at the bottom, growing during the growing season, and harvesting and selling our profits at the top. All right. So think of it like farming, buying and planting at the beginning, growing, and then selling and harvesting that money at the top. We need to be counter-cyclical. We need to be buying when everyone else is selling. All right. That's what we want to be doing. This is a very basic drawing, but there's no other way I can really explain this, right? The market goes up, the market drops all the way back down. The market's eventually going to go all the way back up. But down the bottom is where fearful investors are selling and exiting the market. What expert investors are doing, they're buying what we call market corrections, right? They're buying at the bottom because it's the buying and planting season. And then they're letting their investments grow during the growing season to finally take profits again at the end of the selling and harvesting season, right? So this is something that and we talk about, I'll be talking about this in the next module as we talk about it, but we talk about multiplying your profits over multiple cycles, okay? And this is something that expert investors do, is they multiply their profits over multiple cycles, all right? Exactly right, Debbie. It just makes sense to do that, okay? Now, some people say to me, "Oh, but Troy, I don't want to, I buy at the bottom, then I've got to wait, and I get bored. Is there any quicker way of doing this?" And of course, there's quicker ways of doing everything, but I always say to people, well, it's not like we're asking people to wait decades here. We're telling you you've got to wait within a 4-year cycle, right? So if you are not prepared to wait for amazing gains within a 4-year cycle, then no one can help you, unfortunately. Crypto isn't for you, but unfortunately, you're not going to find any investment that will be for you. And whatever investment you invest in, until you sort out your mindset of waiting for those returns to happen, you will never ever profit on any investment, because crypto is the fastest way to make money. So if you can't wait for a crypto cycle or a Bitcoin cycle, you're not going to be able to wait for any other cycle. You're certainly not going to be able to wait for a gold, silver, property cycle or anything like that. That's for sure, right? So if you're finding that you just can't wait that period of time within the 4-year cycle for whatever reason you want to make up in your head, then that is an issue that you need to sort out with your mindset. That's not something that anyone else can help you but yourself, right? So obviously, I would suggest and encourage you to watch the mindset modules at the end of these crypto modules to try and get your head right. Because as I said, if you're not prepared to wait within a 4-year cycle, then no investment's going to be able to help you. All right. Exactly right, Debbie. It's about the long game, but I mean, it's pretty good when the long game is like only 4 years. It's incredible. Exactly right, Aaron. It's like an apprenticeship or a degree. You have to do the time to get the reward at the end. Okay. And that's what it's about. So, like I said before, we want to be planting the seeds before the halving. That's the plan. But if you got here during the halving or after the halving, that's okay as well. As I'm speaking today, September 2024, I still believe at the moment we're still in a period of time here to be able to capitalize on the upcoming bull market over the next, potential 12, 15 months, 12, 16 months even. But this is essentially, the way that we do it and multiply our gains over multiple cycles, right? Because, the way I'm thinking about it is because historically, what happens after the halving is that we historically over that 4-year cycle, it's followed by, somewhere approximately around a 1 year, 1 year kind of bull market. Okay. The big boom kind of happens, within about that 12, 18-month period after it, in and around. There's no exact time frame, but as you can tell from the previous 4-year cycles, as I said, the last high was November 2021. Previous before that, December 2017, December 2013. So if you put 4 years on top of November 2021, what are we looking at? November, December 2025. So somewhere around the end of 2025, and that's what we want to be keeping our sole focus on. Dollar cost averaging, buying into the bear market or into the market when it's down for exponential gains, right? So we want to be buying when there's a lot of fear in the market. So as I'm talking today live here in September 2024, there's been a lot of fear in the market recently. We've seen some dips, a lot of sideways movement, a lot of fear going on. So we're still in my opinion, still in very much a market that we can buy in and be able to capitalize on. We want to be buying essentially what the experts say is, and there's been many comments around this, but when there's blood on the streets, you need to be purchasing, right? There's many comments and various quotations around that, but essentially when everyone else is selling and panicking and crying, that's when we want to be buying. All right. But nearly everyone does the opposite. When we feel fear, when we feel like there's no future, when we feel like, oh my goodness, my returns are never going to go up because you're letting your mindset, your poor mindset overrun you, then everyone often does the opposite. Without doubt, the best way is to dollar cost average, all right, when we're buying in, but it's also the best way is to dollar cost average selling near the top of the bull market to realize our profits as well, right? So the same way that we dollar cost average in or feed the beast, as I talk about it in the book, and purchase at the bottom of the market or as the market's plateauing, the same way we're going to be dollar cost averaging out near the top of the market as well, right? So people often ask me, they say, Troy, well, when, a market top hits, what do you actually do? Do you completely exit the market straight into paper money, like into fiat currency? What do you actually do? And there's a few things you can do around this. Now, yeah, obviously one of the ways is you can exit your positions out of Bitcoin and whatever other coins you may be in near the top of the market, and exit all the way into cash and hold it in cash while you wait for the market to correct before you potentially purchase back in. Or you can convert them over into stable coins. Stable coins is another way that a lot of people do. It prevents them from having to, move it out of crypto back into a government issued currency. Now, we don't recommend either way. I'm not commenting to do either way. I'm just giving people options on what to do. Because yeah, you need to make sure you're comfortable. If you are going to do the stable coin option, you need to make sure you're comfortable with the stable coin that you choose. And obviously, we need to take into account the different jurisdictions on where you live. So obviously, depending on your jurisdiction, your setup, whatever it may be, you may need to pay tax on the gains that you've made. So, so from experience, in my opinion, even if you do need to pay tax, for example, from my experience, it's much better to be taking those gains near the top than riding the market back down, right? Than riding the market back down. You're better off taking the gains at the top than riding it all as it goes back down. Yes, DCA means dollar cost averaging, Christine. Yeah, so we're going to be talking about different things like that, Aaron, about how do you know when the top is in or when it's near. We're going to be discussing a little bit more about that later in the module. Yeah, so basically what we want to be doing is we want to be exiting into either stable coin, potentially cash, near the top. So then when the market corrects, you can either do one or two things. A lot of people are just going to take all their gains from this market. Maybe they're going to buy a property or do whatever they want to do, and that's totally fine. What I'll be doing though is reinvesting at the bottom of the market to reinvest and hopefully get even more Bitcoin than what I had at the beginning of the bull market, right? So, for example, if you're selling near the top and you've made an overall a 10x gain on your money, well, if Bitcoin's hit a high of, let's say, $150,000, if it corrects all the way back down to $50,000 or $60,000 or whatever, then you can potentially buy back into the market at the corrected price, right? So you may have made all that profit, taken it out at the top. The market's made its significant correction after about a year or so. You then purchase back into the market as everyone else is selling. And then that's how you maximize your profit over multiple cycles. And I'm going to talk about that more in the next module as well. So people like, very, very smart investors in the world, like Warren Buffett, for example, he sits on billions of dollars in cash quite often to be able to purchase stocks and shares when they have massive corrections. Okay. But that guy, as an example, is a perfect example of someone who is extremely patient and is prepared to wait decades upon decades to make their realized gains, right? So he's someone that's made billions and billions and billions of dollars over multiple decades by purchasing, proven stocks and shares when they've made huge market corrections, right? So that's just an example of what you can do. But with crypto, you certainly don't need to wait as long as that. You don't need to be waiting decades because yeah, the brilliant thing is, and the beautiful thing is that with crypto, quite often within 4 year cycles, we can make considerable gains. So essentially, we don't want to be riding this wave all the way up, only to ride it all the way back down. I did this. I did this in 2017 in my first Bitcoin market cycle with that I was in, because I entered at the beginning of 2016. I did this at the end of 2017. You know, I made all these what I thought was amazing gains, but essentially they were paper gains, right? I was sitting on a lot of money, but that money was essentially on paper. I never realized any of those gains, or I certainly didn't realize the majority of those gains. Some of it I did, thankfully, in the end, but a lot of it I didn't realize those gains when they'd hit the top, because I just wasn't aware of the market. I wasn't. I'd only been in crypto under 2 years at the time, and I just thought, oh wow, this is just going to keep going up. Because if you turned on social media, if you listened to people that I thought were so-called people that knew things, they were just telling me the price is just it's nowhere near the top yet. We're not going to top out at $20,000 Bitcoin. It's going to keep going, yada, yada, yada. And what happened? That absolutely didn't happen. We topped out at $20,000, and within a year, we'd hit an all-time low of about 3,400 US dollars, I think it was. So literally took a 70% reduction in price over the space of a year. So this is and a lot of the altcoins took a heck of a lot more of a reduction than that. Bitcoin maybe took 70%, but some altcoins took 99% losses, right? So huge paper gains were made in 2017, but then huge paper losses were then made and created in 2018. And therefore, what do you do from those things? Well, there's no point crying about it. What you do is you learn from it. And that is what I did, and learned from that, and capitalized on what I learned in 2017, capitalized on it in the 2021 bull run. And now I'm here with even more experience in the 2025 bull run to or what hopefully potentially is the 2025 bull run, to be able to capitalize on this and hopefully be able to share that knowledge with you all as well. Okay, so that's obviously the plan. So let's look at Bitcoins versus altcoins in the bear market, right? This is potentially what I see is going to potentially happen. And now we're in an age of after the introduction of Bitcoin ETF. So what we've seen is a halving that's just happened. I believe what we're going to happen is we're going to go into a bull market. Now, just because I've got the altcoin line underneath the Bitcoin line doesn't mean Bitcoins are going to perform better. Maybe altcoins perform better. But either way, if Bitcoin goes up, as I'm anticipating it to happen by the end of 2025, then we're going to see massive gains happen in altcoins as well. But what's going to happen for altcoins is that it's going to have its usual fall off, right? Where it's going to hit a bottom, and then we're going to have to work our way back up to the next bull market. But potentially what could happen, and I think this could be a real possibility, is that after the introduction of the Bitcoin ETF, which happened earlier this year, and we've got some of the largest and most massive financial institutions like BlackRock and Fidelity now owning Bitcoin, we're potentially may not see quite a brutal bear market for Bitcoin. We will see reduction in price, but maybe not as brutal as we'd previously seen, where altcoins, I believe, will still get a fair whack after the top of the next bull market. Now, this is just obviously a prediction. This is certainly not something that I have a crystal ball out and said that is definitely going to happen. But I believe this is the potential of what may happen. Is that I feel as we go over time, and this could potentially happen after this next top of this next bull market at the end of 2025 that's anticipated, we could potentially start seeing Bitcoin hold its value much better than what it did in previous cycles. All right, so that's definitely something that is a possibility. So what are the two risks when planning to exit the bull market? What two risks have we got here? Well, number one, quite simply, is selling too early and missing some of the market top. All right, this is number one. And number two that a lot of people worry about is selling too late, and it goes into downward market, and then we lose some of the gains that we potentially have made, right? So this kind of ties into the question that some people asked live here before, which was, Troy, how how do we know when the top of the market is? How do we know when to potentially sell near the top? And once again, I'll say this again before I go deeper into this subject. No one has a crystal ball. No one has the full insights and gains to be able to accurately predict, as much as say people say they can accurately predict the top of the market. All right. It's kind of a balancing act that I like to say to people. And this is why I like to say to people why it's important to dollar cost average out of the market. The same way that it's important to dollar cost average into the market, it's important to dollar cost average out of the market. That is correct, Michael. It is helpful to learn how to read charts as well. That can help as well. But ultimately, a lot of this is around timing, in my opinion. And like I said, it's going to be a balancing act in and around timing. So the same way that we've dollar cost average into the market over the last couple of years, you've got to be prepared near the top of the market, towards the end of 2025, if that's what we're looking at, to be dollar cost averaging out of the market. Now, there's a real possibility you're going to start dollar cost averaging out before the top. And there's a real possibility that you're not going to finish dollar cost averaging out until after the top. But the best way I kind of say to people about this is, don't be so afraid that you're not going to get the maximum gains. Be appreciative of what you've done and the gains that you've been able to make over such a short period of time. Okay. Everyone has their own risk profile on how much they want to hold on to it. Okay. Now in 2021, I did a mixture of number one and number two, right? And through good management, I was able to pull out quite a significantly good result in 2021, where my average exit price was somewhere in and around between the 55 to 60,000 US dollar mark. Okay. Now that was done over a period of weeks at the end of 2021. Now, the plan would be, right? And I guess this is also the beauty about you all being part of the Crypto New Rich, program, is that you guys will also know, and obviously, if you refer to module 3, which is the bonus module 3, where I'll talk about my top 10 winning cryptos and part of a winning portfolio strategy, what you guys will also be notified over towards the end of next year is when I'm looking at and seeing the tops of the market. And then you guys can make your decision on whether you think it's okay. Troy may have mentioned that he's looking and seeing the tops of the market here. He may be potentially dollar cost averaging out in and around these areas because of these certain reasons. And there could be a multitude of reasons that are happening, right? We could potentially see things like a proper euphoria stage where we've got retail investors just absolutely pouring billions of dollars in every day. We could see the release of, a multitude of different major investment structures that are opening up new trading desks in Bitcoin. There could be a multitude of different reasons. And yeah, I guess the beauty and benefit of being part of the Crypto New Rich community is that you're going to be kind of notified and advised via email when I'm seeing the tops of the market. That's the benefit of being part of this community. But that's just an example of some of the things that you're going to potentially see. And it's impossible to kind of predict exact timing or the exact reasons. And there's a very real possibility as well, guys, that I could get it wrong. Absolutely I could. And maybe the timing might be out, but we've only got the data to go by. So we've got the last 12 years of data on standby and on the ready, which is fantastic. So we've got the last 12 years of data on standby on the ready to be able to tell us when potentially to exit these positions. And like I said, there's a very real possibility that we're going to exit some positions too early and a very real possibility we're going to exit some positions too late. But the overall vibe here is that we want to be dollar cost averaging out of the market, right? Now you may be comfortable with just selling it all once and not dollar cost averaging out because you're freaking out that the top's already been. That's fine. That's all good. I'm just telling you that historically, I've found the best way is dollar cost averaging out of the market. The same way that historically the best way to get into crypto is dollar cost averaging or feeding the beast, getting into the market. Anoop has asked, would you also notify for nearby bottoms? Anoop, I believe that we're currently, as we're talking right now in September 2024, we're not going to see a bottom anywhere near anywhere soon, mate. So if you're waiting for potentially better prices, in my opinion, Anoop, the time to be dollar cost averaging, and if you want to get yourself some positions is now. Don't try and wait for potential even cheaper prices. All right. If you want to get skin in the game, do it now. Patience is the big thing here, but patience is also something that people just simply don't have. All right. Wait for the next bear market to redeploy capital. This is a big one, right? So let's say we've successfully exited our positions at hopefully fairly good ranges. You know, we may have exited some of the positions too early, we may have exited some of the positions too late, but ultimately we've been able to make some good gains, which is fantastic, right? Everyone thinks and worries about this now. Oh, what about, what do I do if I can exit? And then how do I capitalize on that? And, what if this, what if that? And I say, right for now, just concentrate on your mindset and concentrate on getting positions right now, capitalizing on what hopefully we're going to see over the next 16 months is some very awesome bullish movement. Capitalize on that bullish movement, capitalize on your gains, and then apply patience to wait if you want to purchase and redeploy your capital at the beginning of the next bear market. Now, this is how experienced and smart investors do it, and this is how you can do it as well. Maybe you might decide, well, out of all the gains I've made, I'm just going to redeploy 50% in the next bear cycle. Maybe you decide to redeploy all 100%. Maybe you decide only to redeploy 10%. Whatever that is, it doesn't matter, right? The idea is, though, just have patience to wait to redeploy back into the market, all right? Because what's going to happen, we're going to see all-time highs, followed by a bunch of panic, followed by capitulation, and just wait for that market to hit rock bottom again. And then we're going to be looking at a time where we can potentially start, looking at some really good prices in crypto again to purchase in and wait for the next Bitcoin 4-year cycle. All right. So to some of you right now at the moment, this won't make any sense. To others, you'll understand it because you understand the importance of long-term investing. But for me, it is a very, very big deal. Okay. This is how generational wealth is created. And this how, in my opinion, is you can do the exact same thing. All right. The whole idea is to be making gains out of the cycle, pull the profits out. If you need to pay tax on it, pay your tax on it. And as the market drops back down, redeploy however much capital you want to redeploy back into the market, and then we go again. And I'm going to talk about this more, as I said. I'm going to talk about this more, how to multiply your gains over multiple cycles in the next module. But patience is the big thing here. Patience in waiting for the top, and then patience again in waiting for when we redeploy. So hold or exit your positions at the top of the bull market. All right. This is the big decision. All right. Now, in my opinion, it's a no-brainer. In my opinion, it's the best way is to exit your positions at the top because then you can get even better prices at the bottom, right? So this is quite often what a lot of people do, and this isn't a right or a wrong way at all. This is just an option that you can do. A lot of people, if they've got some Bitcoin, so for example, if you're doing the winning portfolio as an example, and you have 40% positions in Bitcoin, a lot of people don't want to ever sell that Bitcoin. So what they're going to do, as opposed to selling their Bitcoin at the top, they're going to hold it as it rides back down and simply just buy more at the bottom. But what they're going to do with their altcoins is be selling it at the top letting it drop, capitulate, die, and then buy more at the bottom, right? So this is just another option of what you can do. As I said, if you're applying and doing the winning portfolio strategy, which you can look at and do more of in the bonus module 3, then maybe what you're doing is you're not selling your Bitcoin at all. You're simply holding it and buying more at the bottom before it rises again. And all you're doing is selling your altcoins for a profit at the top. And when it hits the bottom, you're then potentially buying more altcoins, or maybe you just are potentially buying more Bitcoin at the bottom. That's another thing that people do as well. So they're just a couple of different options of what to do. In my opinion, though, um, you know, the best way to profit from multiple cycles is to be selling that profit at the top and then rebuying it all back in at the bottom. But as I said, there's a few different options there. Some people just want to hold their Bitcoin, and that's totally fine as well. Always zoom out. All right, zoom out for perspective. Short-term focus. This is how amateur investors get stressed that Bitcoin is down this week, right? So just an example, right? So Bitcoin was up last week and now it's down. Oh my goodness. I'm freaking out. Like this is the end of the world, and you completely forget that, hey, the whole reason we're buying Bitcoin or maybe purchasing some other altcoins or whatever it is you're doing is because you're looking at a potential high in the market at the end of 2025 or at the end of the cycle, whatever cycle that may be. Zoom out, and the zoom out will give you long-term focus, right? Instead of concentrating on that week, zoom out. This is what a professional investor does, okay? Professional investors with long-term plans understand and do not get stressed by temporary market corrections. Instead, what they do is they capitalize on temporary market corrections, right? To be able to dollar cost average or feed the beast more as the market moves back down and then ultimately back up again, right? So you've just got to always, always, always zoom out to give you total perspective on what's actually happening. And I can't say the amount of times that I've heard this, Troy, Bitcoin's down this week. What am I going to do? Like what's happening? Like why is that? And I often say to people, go out and see the sun. Forget about the market. Stop looking at the market. Stop looking at it week to week. Stop looking at it day to day. If you're an investor and you're holding on to this for the high of the next potential market, why are you even looking at the market before, before August 2025, right? There is just no need to even look at the market until then. So, that's the best advice I can give people, right? If you're getting freaked out about it, you need to turn the computer off and walk away and go see some sun. Or maybe what it is, maybe the reason you're getting freaked out about it is because you've overcapitalized. Maybe you've got too much skin in the game. Maybe you've invested too much in crypto. And therefore, that's you being extremely silly and an amateur investor, right? If Bitcoin and if the price of Bitcoin and the price of crypto is keeping you awake at night, you've got too much skin in the game. You need to sell some and get out of it, right? And that goes for any investment that you may have, right? That's just the facts. But what we want to be doing, we want to continue to keep dollar cost average accumulating in that first half of the bull market, right? We want to be continuously accumulating as the market is moving sideways. And even at the moment, we're at the foot of the mountain as I talk in September 2024. Currently, we're trading in and around about 56,000 US dollar Bitcoin. I think it's around about 2,400 US dollar Ethereum. In my opinion, we're still very much in a period of time where, we can be dollar cost averaging. When we've just seen a market movement down in the last week or so. Once again, when there's blood on the streets, it's a great time to purchase usually, right? We need to be doing the opposite of what everyone else is doing. We need to be buying the dips on the way up, right? But obviously, not too close to the top of the cycle. We don't want to be buying the dips at the top of the cycle. What we want to be doing is buying the dips potentially as we're moving up, right? As we're moving up. And maybe it might get to a point though where you're like, you know what? I'm happy with my position. And you should get to that point where you're happy with the amount of money that you have in, and then just simply wait. That's when you need to start applying patience from that point, right? Apply patience. There's no other way of explaining this without applying patience. All right. And I'm sorry, but for the people that may be saying in the chat here, um, it's easier when you're younger. You've got more cycles to play. My answer to that is that so let's say you think, oh, I've only got a year to live. So therefore, does that mean that you're going to go to the casino and potentially try and double all your money on blackjack? If is that what that means? Because what you're essentially saying is that, well, I'm going to use the excuse that I'm older and I don't have as many cycles to go. So therefore, I have more I have more of a license to gamble more of my money. Now, it's your prerogative. If that's your money, go ahead and do it. It's your money. I don't mind what you do with it. Go ahead and do that with it. But what I'm saying is that if you want to apply the correct mindset to this, that is the incorrect mindset to have. Okay? Because what you're going to do is you're going to start panicking. You're going to start buying emotionally, which means only one thing's going to happen. You're going to sell emotionally. And nothing is ever going to feel enough because you're always going to use the reason and the excuse of, oh, I had to do that because I don't have multiple cycles to capitalize on this. So if that's the dice you want to roll and that's the risk you want to take, then go ahead and do that. That's fine. But I'm just telling you, just understand that the market doesn't care about your age. The market doesn't care that you may only have the next one or two cycles to do this. The market doesn't care, right? If anything, it's going to prey on you because you're vulnerable, because you're leaving yourself open and vulnerable. Because what you're doing essentially is you're going in there and you're gambling. You're not applying the right principles. The market doesn't care about your feelings, doesn't care that you may not have as many cycles as someone else. It doesn't care. So you need to overcome that and get the right mindset. Okay. Brian's asked, how long, Troy, do you think the market will continue going sideways? Will it continue going sideways? This would help for dollar cost averaging. I think at the moment, Brian, I still think we've still got a bit of time. Currently, as is right now, once again, Brian, and for everyone else, I don't have a crystal ball. I can't tell you how much longer it's going to hover around these prices. But while they're at these prices, capitalize on it. That's all I'm going to say. It could be another week. It could be another 5, 6 months. Like, who knows? Just capitalize on it when it's there. Christine's asked, how would one know that it will not dip if you buy near the top? One does not know that, Christine, and one will never know that. The only way to really tell, Christine, is, as I said, there's a variety of things at the top that can happen. There's certain indicators that I've seen have happened multiple times as we enter near the top of the market from a charting perspective that I've seen. Things that are impossible for me to teach on a basic and beginner course like this. But obviously, you guys have the advantage of being in the Crypto New Rich community that you guys will be informed via email when I'm seeing certain tops in the markets. And there's other things from a fundamental perspective that you'll see. As I said, I mentioned a few examples before, but examples of, a ton of retail money coming in because of some celebrity endorsing some crypto thing, and that's blown up. And then there's multiple different things that can happen near the top of the market. Everyone wants a piece of the crypto market at the top of the market, and that can happen through multiple different parameters. But like I said, there's no specific reasons. From a technical and charting perspective, there's some things that I've noticed and that I've seen from being in the market over the last 8 years. But from a fundamental perspective, essentially, you've just got to know when we're in a euphoria stage. Everyone is positive about Bitcoin. Everyone is telling people to buy crypto. Everyone is saying you got to get on this thing because we're going to go to a gazillion dollars. They're often a lot of good signs of where we're starting to hit market tops. Sam's asked, as an example, when dollar cost averaging out of the market, what percentage would you dollar cost average out and over what time period? For example, 25% every week over a month as an example. Usually I find, Sam, when we're hitting near the top of a market, the top of a market will last somewhere around that kind of 4 week mark, right? Not exactly, but somewhere in and around that 4 week mark. So, as an example, what I did last time, I exited over a 4 week period. I exited about 50% to start with, and then I did, I think it was, yeah, in and around that kind of 15% mark over the following 3 weeks. But this time in this cycle, Sam, it could be different. There's no golden rule. That's why I'm trying to specify this, that there's no golden rule, because there could be something that happens at the top of the market that extends the market cycle for a little bit longer. It could be something that comes along that's a particular thing. But historically, Sam, it's usually over a 4 week period. Debbie's asked, hypothetically, Troy, what could happen in if this recession that everyone is talking about actually happens and the government introduces central bank digital currencies? How will this affect us as crypto investors? Debbie, I never, ever, ever, ever care about what ifs. All I care about is what is actually happening right now. If something like all that stuff that you've just mentioned happens, we worry and we deal with it then. But until anything like that happens, I don't worry or deal with it. Like the same way that people have been telling me that the US dollar is going to crash for the last 25 years. If I'd have worried and freaked out about that 25 years ago, I never would have made any money in investments because I never would have invested any money, right? So it's yeah, we can't worry about things that potentially may or may not happen, right? We can only adapt as they do, or if we see it coming, we try and adapt to the market conditions. Yeah, no, I get it, Debbie. Yeah, not worrying. Just have had people ask me that. There's nothing we can do. So I would give them the same answer, Debbie. That basically we can't deal with what ifs. Because the problem with dealing with what ifs, the issue with dealing with what ifs is that what if none of those things actually happen? And then you're kind of left with a bunch of money that you did nothing with. Yeah, you do. We've got to just live a day at a time. We just got to see, and we've got to adapt and adopt as things happen and as we can see things happen. Um, Sorry, James, you might want to clarify what your question is. I worry if I can't sell in time, if no buyers. I think that's your question, James. So I would just say, James, at the top of the market, mate, if you're selling at the top of the market, don't worry that there won't be any buyers. If you're selling at the top of the market, James, there's going to be plenty of buyers, mate. Don't worry about that because you're going to be doing opposite to what the herd's doing. 99% of people are going to be buying crypto, James. You're going to be selling. I don't think you're going to have any problem if you're selling near the top, mate. Especially if you're selling coins like main coins. Like I'm not talking, if you're trying to sell maybe some really dodgy, cheap, uh, you know, small coin, that might be different. But your main coins, mate, you're not going to have any problem. Sam's asked if we account our into a stable coin, where do you store the stable coin waiting to reinvest? So yeah, so Sam, in module number 10, we're going to be talking about security of coins. I'm going to be talking about hardware wallets and where to store coins, Sam. Jeff's asked, would you say a recession is likely to give rises to prices in crypto and precious metals? Yeah, potentially, Jeff. That's what often happens because people want to get into hard assets that their money doesn't get eaten away, and precious metals and crypto definitely is that. So it's all about having dry powder ready to deploy, guys, right? Market does a correction. This is where we deploy dry powder. Now, by dry powder, I'm saying having some cash on hand, having some money on the side ready to go. Because when we get nice market corrections like we're potentially seeing right now, as I'm talking at the beginning of September 2024, we've had a correction, what we call a correction in the market, currently sitting around 56,000 US dollars. Based on the last 12 years of data, this price looks pretty good. Not saying it is a good price. I'm just saying what I'm seeing right now. And yeah, could be pretty good for where we could potentially be by the end of 2025. Deploying dry powder at the bottom of corrections can often give us very, very easy gains as the market moves in more of an upwards direction. Sandra's asked, I'm unclear on the process on how we buy and sell on dollar cost averaging. Yeah, that's fine, Sandra. I would suggest for you, Sandra, to go back and watch module number 3, which is our bonus module, which is about moving out into purchasing a winning crypto portfolio and how to purchase and so on. So I would suggest Sandra to go watch module number 3, which is the bonus module. Thank you, Salome. I really appreciate it. Thank you for the kind words. I'm trying to keep things as simple as I can because this really is aimed for beginners to hopefully get the absolute most out of this market. Johan has asked, would you keep this dry powder throughout every season or only during a potential market correction? I kind of keep it, I always have cash on the sidelines ready to go purely for the fact that you can get better prices. So, as we start to move into 2025, I might have a little bit less of that. Johan, I probably won't have quite so much. But as we're talking right now, I think that the market's going to give us some pretty nice prices to capitalize on. But yeah, as we move into the potential bull market of 2025, then that's when probably don't need to as much because mostly what we're doing is just realizing our gains because it's the growing season and we're waiting to hit the harvesting, which is the selling season, which fingers crossed, based on the last 12 years of data, should be towards the end of 2025. Thank you, Sam. I appreciate it, mate. Yes, sharing as much as I can and sharing all my knowledge that I can from the last 8.5 years of investing in this market. Awesome. So, that brings us to our next module. So our next module is, like I mentioned a couple of times during this module, it's moving us into multiple cycles for maximum profits. So basically, it's showing how you can really maximize your profits and be an experienced investor by investing in multiple Bitcoin cycles. And this is how I said before a few times during the different modules is how experienced investors make maximum gains is that they capitalize on multiple cycles. So so that is all that the next module is going to be about. And it's also step number 5 in our Crypto Pentagon steps as well. It's step number 5, which is multiple, which is an exciting step because hopefully by that point at the end of this Bitcoin 4-year cycle, you've made some amazing gains. That's the plan with this module is timing the market and timing the cycle to make maximum gains. And then the next step is then multiplying those gains, hopefully over multiple market cycles, over multiple Bitcoin market cycles. So that is the plan. Aaron's asked, Troy, I know you don't have a crystal ball. Thank you, Aaron. I certainly don't. But do you think there are a few 4-year cycles left before the big institutions wreck it? Is what Aaron's saying. Look, I don't think they're going to wreck it, Aaron, at all. At this stage, Aaron, the data is still valid until the data is not valid anymore. Like I said, I don't play in what ifs. I don't play in maybes or anything like that. I play in the facts, figures, and data that we're looking at, and the data tells us that the Bitcoin 4-year cycle is alive and well as it's always been over the last 12 years. After this cycle, who knows? What we've got to be prepared to do is not die by what happened before, and be open and willing to adopt, and change to whatever comes at us, mate. That's the best way to look at it. That's the way I've dealt with everything in my life, and that's probably the best advice I can give, Aaron, is that we adjust, we adopt, and we adapt to whatever the next cycle brings us. Now, if that's further 4-year cycles, fantastic. If it's some kind of multi-year bear cycle, we've got to deal with that as well. If it's some kind of other cycle, we deal with that. We just deal with whatever the data tells us, and that's the beauty about having an open mind and always being willing to adapt to whatever the market tells us. Absolutely. Alan and Bronwyn, I believe, if I'm sure I'm not incorrect in saying this module number is module 8, I believe, guys. The membership portal will tell you that, but I believe this is module 8, guys. Thank you, everyone. Thank you for all the kind words in the comment section here. If you are watching the recording, there's a lot of people here writing a lot of kind things. So thank you so much, guys. I really do appreciate it. I do read them all. There's a lot of them to read, but thank you all so much. Thank you, Karen, Irina, Desmond, Christine, Colleen, Gavin. Thank you, everyone, guys. I really, really do appreciate it. Thank you. And I'm so glad that you're getting a lot out of these modules. I've tried to make them as basic and as easy to understand as possible. And obviously, if you're going along with them with the book, hopefully that kind of embeds that knowledge as well. So thank you all as well. I look forward to seeing you on the next module, which is multiple cycles for maximum profits, as I said. And I look forward to seeing you there. As for everyone who's here live with me, thank you for being such an amazing live audience and asking some fantastic questions and adding to the value of this module. Thank you all so much, and I look forward to seeing you all on the next module. Next module, which is multiple cycles for maximum profits. Other than that, guys, it is bye from me for now. Thanks, guys. See you soon.